Assalamu alaikum everyone. Welcome back to my channel Rapid Revision. Today I'll be solving a question from Clubs and Societies, and this is from February March 2024. This is question number 3 of this exam. The question here says the Sporting Excellence Club provides sports facilities for its members. It also runs a shop where members can buy sportswear. The club's assets and liabilities included the following. They have given you 31st December details. So that means this becomes the opening details for 1st January 2023. And they've given you subscriptions in advance at start and subscription in advance at end. So that means subscription in advance means prepaid subscriptions. So prepaid subscriptions is like we are giving service to our members, right? And if they pay us the subscriptions in advance, this is going to be our liability towards our members because we are now supposed to give them the service. So subscription in advance is basically subscriptions is an income, and income in advance is the club's liability. And also this will come in the subscriptions account. That is part A of this question. Subscription in arrears means arrears is the other name for owing, and owing subscriptions means that we have given the service to our members, but they haven't paid us the amount that was required. So all of this, like subscription in advance and subscriptions in arrears, is going to come in the subscriptions account. They have given you insurance paid in advance at start and at end. So that means there is an opening prepaid for an expense, and also there is a closing prepaid for an expense. So last year I paid extra for the current year. That is last year was 2022, current year is 2023. So in 2022 we paid extra for 2023, that is $240. And in 2023 we have paid extra for future, that is 2024. So we'll deal with that when we talk about insurance. They've given you shop inventory at start and at end. They have given you trade payables for shop supplies. So what we do is whenever we are buying goods on credit, right? So shop supplies are bought on credit. So whenever purchases are on credit, we have a trade payables balance at start, means what we owe our trade payables at the start of the year, and what we owe our trade payables at the end of the year is trade payables for shop supplies. And we'll deal with this when we make the shop income statement. But one thing, a lot of students have also asked me, Miss, there is no format for clubs and societies in your formats ebook. But the point is that clubs and societies is a question which has a lot of variations. But one thing that students must know is that the incomes of any club. So incomes, there are 4 types of incomes in case of a club. Number 1 is subscriptions is an income. So subscriptions is the membership fees that the members pay to be the part of the club. So subscriptions is an income. Number 2 is it's either a shop or a restaurant, or it is a cafe in certain questions. So cafe in some questions, or it's a bar in some questions, uh, or it's just like a restaurant, cafe, shop, or bar. That will be in any question. Like the club can have some bakery inside the club, where where the members can have the bakery items. So there's another income, that is events. So let's say it's a sports club, so they can have a competition, a racing competition. That is also an event. Similarly, in certain cases, we have concerts as events. We have dinner dance as events. So we have events in case of clubs. Or and the fourth income for in the case of a club is donation. So we don't see donation very often in the questions, but right here I can see there are 2 incomes. One is subscriptions, and the other is the shop that we are operating inside the club, where we are selling sportswear. That is where we are also earning money in this club. Then they have given you the following totals have been taken from the club's receipts and payments account for the year ended 31st December 2023. They have given you money received uh, from subscriptions, that is 11,950, and then they have given you money received from shop sales, that is 31,890. Whatever goods we sold, we received 31,890 against the sales that we made for shop sportswear. Then we have payments for the club. So they have trade payables for shop supplies, what we have paid to trade payables, what we have paid for shop wages, what we have paid for club rent and insurance is the club's rent and insurance. It's not related to the shop, but the shop wages are entirely for the shop, and the trade payables for shop supplies is also for the shop income statement that we are going to make in one of the parts of this question. Other club expenses is 1122, that are general club expenses, not related to the club. Then they're saying prepare the subscriptions account for the year ended 31st December 2023, balance the account and bring down the balances at 1st January 2024. So this is going to be very, very simple, because in a lot of my videos I have talked about income accounts, and income accounts generally follow this rule, that is OPPO. So that means if you have an owing at start, that means last year I gave some services to my members and they did not pay me, so that is 480 in this case. So last year I gave services to members but they did not pay me, this will be my balance brought down. Owing brought down will come on the debit side, that is $480, and this is going to be 1st January 2023. Then there will be a prepaid brought down that will come on the credit side. So 1st January 2023, balance brought down. So prepaid is my liability. Prepaid income is my liability, because last year I have received extra income from my members, which is for this year, which relates to this year. So prepaid income is always a liability for the club. That is why the balance brought down comes on the credit side. Subscriptions received in advance is 610, which I'll write on the credit side. Then we have balance carried down. So this is basically my prepaid carried down. So this year I have received extra for next year from my members, that is 570 in this case, 31st December 2023. I'll write here 570, I'll write here 31st December 2023. And then on 31st December 2003, we'll have a carried down of owing. We'll write here balance carried down. So this year we have given services to our members, but they haven't paid the amount that relates to this year. So that is an owing income, and owing income is always my asset. So this is going to be 465. So I'll just write here 465. And now I need to record this, what I have received for subscriptions. So when I have received something for subscriptions, what I'll do is, if you think of the double entry in this situation, it's bank debit, subscriptions account credit. So in the details, I will write here bank, and I'm going to write here 11,950. So I'll write here 11,950. And because I don't have a specific date, I can write the last date here, 31st December 2023. And then there is this thing called income and expenditure that we prepare in case of a club. We don't prepare the club's income statement. Instead of the income statement, we prepare the income and expenditure account, and this will come out to be 11,975. So this I'll write here 31st December 2023. So notice I have actually found this value from my subscriptions account. So how did I find this value? So basically I totaled the value on the credit side. So 610 plus 11,950 plus 465, and I subtracted 480 and 570 from the total of the credit side. Then I found out 11,975. So I'll total this account and I'll bring down these balances, because also it is very important whenever they're asking you to prepare a T account, right? So you need to total the account and bring down the balances, because that is part of the requirement of the question. I'll write here 13025 on both sides, 13025. This balance carried down will become my balance brought down. I'll write here balance brought down. I'll write here 465. This will be 1st January 2024. I'll write again here 1st January 2024. I'll write here balance brought down, and I will write here 570. So that is it for this question. That is it for this part. We'll move on to the next part. They're saying here prepare the rent and insurance account for the year ended 31st December 2023. balance the account and bring down the balance on 1st January 2024. So this is an expense account, and in a lot of videos of mine I have mentioned that expense account follow this rule POOP, which means if there is a prepaid at start, it will come on the debit side, and we have a prepaid at start and prepaid at end in case of insurance. So I'll write here balance brought down. I'll write here 1st January 2023. The balance brought down will be insurance paid in advance, that is 240. So I'm going to write 240 here, and I have a balance carried down in this question as well, which is also paid in advance. So I'll write here balance carried down. On the credit side, I'll write here balance carried down. I'll write here $250. This is going to be 31st December 2023. And what I have paid for rent and insurance, club rent and insurance payment is 7390. So when I made the payment, right? So again, you think of the double entry. Rent and insurance account will be debited, bank account will be credited. So I'll write here bank on the debit side, and I'll write here 7390. This is the payment that I have made for club rent and insurance. I'm going to write here 31st December 2023 because I don't have a specific date for payment in this case. So I'll write the last date, and then I will find out the income and expenditure value. Again, notice this, that in other expense questions we normally write income statement, but in case of the club we'll have to prepare an income and expenditure account. So I will write here income and expenditure. I will not write income statement, I will write income and expenditure. And also this I have to calculate. So again, if I'm calculating a missing value in a T account, I need to do total of heavy side. So total of heavy side is this 240 plus 7390 minus total of credit side is 250. So when you work this out, you will get 7380. This is my income and expenditure value. Now when you total both sides, so when you total both sides, you will get a total of 7630 on both sides. 7630. This balance carried down will become my balance brought down, and this will be $250. You'll write here 1st January 2020. So that's it for part B. In part C, they are saying calculate shop purchases. So shop purchases for the year ended 31st December 2023. So if you go back to the question, what we have paid to our trade payables is 23290. We have an opening owing for trade payables and we have a closing owing for trade payables. So there is one thing that we make in accounting is the trade payables. It's like a purchases ledger control account, which is also a total trade payables account, for which we have a brought down on the credit side. So we are basically preparing a total trade payables account, and balance brought down will come on the credit side. What we owe our trade payables at the start of the year is my balance brought down, and what I owe my trade payables at start is 2140. So I'll write here 2140, and this will be 1st January 2024. I'll write here 31st December 2000. Sorry, this is not 24, this is 23. So I'll write here 1st January 2023. This will be balance brought down to 140. 31st December 2023, balance carried down. And this is going to be right here from the question 2470. So I'll write here 2470. And then I need to record the amount that I have paid to trade payables, that is 23290. So when you pay your trade payables, right? So you do bank credit because money is going out of the business, and you do trade payables debit. So in my trade payables account, I'll write here bank, and I'll write 23290, which is the payment that I have made for my trade payables. And this is going to be 31st December 2023. And now I'll calculate purchases. So this is the place where you get credit purchases from, because whenever when you buy goods from your trade payables, right, and credit purchases, the double entries purchases account is debited, trade payable account is credited, and this is a trade payable account. So basically purchases will be found from the credit side of the trade payable account. I'll write here 31st December 2023, and this purchases amount will be 23620. So now the total of this account will be 25760 on both sides. This balance carried down will become my balance brought down. Balance brought down 2470. This is what I owe my trade payables at the start of 2024. So 1st January 2024, balance brought down will be 2470. Okay, the next part here says prepare the income statement for the shop for the year ended 31st December 2023. So for the income statement is a normal income statement that we prepare for sole traders also. In that case, we start with revenue, right? So shop sales is going to be my revenue, and the revenue that I have earned from shop sales is 31,890. I will directly write this in the second column, 31,890. There's no sales return, so I'll directly jump to less cost of sales, and then I'm going to write opening inventory. So we do have opening inventory and closing inventory in the case of shop inventory here, and shop inventory here is 2500 at start, so I'll write here 2500. Then I will write here add purchases. So purchases is basically found in the last part, that is part C of this question. I'll write here 23,620, and then I don't have anything else. We don't have purchases returns, so I'll just total this. The total of this will be 26,120. From this I will subtract the closing inventory, so I'll write here less closing inventory, and the closing inventory I know it's 2750. From the question I'll write here 2750. I'll subtract this from 26120, so I will get a value here 23,370. I'll subtract that from 31,890, and the value that I will get here is 8520. Now I need to subtract shop wages from this, so I'll write here less shop wages, and shop wages in this case is 3268. We don't have any other shop expense. If we had other shop expenses, we would have recorded those here in the expenses section, but we just have shop wages, so I will write here, I'll subtract shop wages from here, 3268, and then what the value that I get here is 5252, which is my profit on the shop. So I'll write here profit for the year, which is the profit that we have made on shop sales. So this basically 8520 was my gross profit. So in the marking scheme you might not see the distinction here, but I actually normally make it in the form of income statement of a sole trader. So we get a gross profit and then we subtract other expenses, that is shop wages is one of them. Then they are saying here, last two parts of this question, state the meaning of the following terms: accumulated fund and income and expenditure account. So what is accumulated fund? Accumulated fund is basically it is the term that we use for capital in case of club. So accumulated fund is the other name, it is the other name for capital. Also there is one more thing, that whenever we get a surplus, right, so in the case of a club there's no investment by the owner, but whenever the club is run, there's some profit that is made. So whenever profit is made, we call that profit as surplus in case of a club. So when incomes are more than your expenditures in your income and expenditure account, we basically call that surplus. And surplus, when you add all the surpluses, right, so that makes up your accumulated fund. So every year whatever surplus we are making on our income and expenditures, we basically make a fund out of it, that is called accumulated fund. So I'll write here accumulated fund arises when you add the surpluses. Accumulated fund arises when when the club adds the surpluses. Also one more thing, that in case of a deficit, right, when expenditures are more and your income is less, the club's incomes are low but we have more expenditures, in that case that will be a deficit. Deficit is always subtracted from the accumulated fund because it's a loss, but if it's a surplus you always add it to accumulated fund. So every year whatever surplus we are making, we add that to the accumulated fund, and hence our accumulated fund basically keeps growing due to surpluses. The next part here is income and expenditure account. So income and expenditure account is basically where we write all the incomes of the club and all the expenditures. So income and expenditures account, income and expenditure account shows the incomes, all the incomes, shows all the incomes. Basically it shows all the incomes of the club, also all the expenditures. Also, if incomes are more than expenditures, so if incomes are more, it is a surplus. So simply, if expenditures are more than incomes, it's going to be a deficit. But if incomes are more than expenditures, that is going to be a surplus. Also, just like the income statement, income and expenditure account also follows the accruals principle of accounting. So whenever you need to adjust your expenses and incomes for prepaid and owing, so that you record that in the income and expenditure account. Also, you need to also record the non-cash expenses such as depreciation in the income and expenditure account in the expenditure section of the income and expenditure account. So that's it for this question. Thank you so much for watching.